share some hints we are using and how you can maybe improve the way you measure your own digital performance. At G-Rating, we currently have already measured and produced scores for 90 different banks on their digital performance, and the hints I'm going to give are based on this experience. Because measuring digital performance is extremely important. It's crucial. You all invest a lot of money in it, and I would say investors need to see what it's giving. And another point is that it has a direct and impactful impact on the short-term financial results. If you haven't looked at it, I really recommend the reading of the Q4 financial result of BBVA. It's really an advocacy on what can digital performance produce on short-term results with higher cross-selling and lower attrition. And obviously, it's impactful on the long-term viability. Here are examples of other markets, but for sure, we all consider that in 10 to 20 years, banks unable to transform will disappear. But it's really not trivial. First, one difficulty is the fact that digital performance is about plenty of different areas. We discussed them yesterday and today. It's about usage, it's about digital proposition, it's also about the internal structure, the culture of the company, AI, and plenty of different areas. It's multidimensional. So how do you measure such a difficult area? Another point is that it's relative to competition. It's not an alone run you're making, it's a race. As an example, in France, one bank could be really happy to have its web traffic increased by 5%, knowing that some of the traffic of their customers go on the mobile app, so it could be really happy about it. But last year, the overall web traffic of banks increased by 8%. So if this bank is already late, plus 5% is not enough. It means the gap between him and the market is increasing. And by the way, when I always read and everybody's speaking about mobile first, I agree on this area, but still the web traffic is still increasing in most countries and with specific usage. And for prospect management, it's still a huge channel to use. Finally, measuring it might be tailored to subjective goals. I'm still struggling against the definition of what is a digital client, what is a digital transaction. And depending on the organization, or the people inside of the organization, then the definition might change and you can just tailor it to your own goal, basically. So if we look first at the multidimensional, multifaceted way of this digital transformation, one answer we are giving is to create a tree structure. You can look at that by having a lot of indicators, hundreds of indicators, but then it doesn't make a lot of sense and it's really hard to read. So what we have decided to do is to always use a tree structure. So we have decided, but then you can do your own choice, to split the digital performance, our ratings, into three. First, the usage of the digital channel, then the digital proposition, and finally the transformation dynamics, what's happening inside. Then you can go deeper and dig in one and decide to, for instance, split usage into web, social, and app. And then on web, you can decide to look at your scores in terms of customers, in terms of prospect, and in terms of satisfaction. It's really, I would say, it's quite easy to increase the usage of the web for your client. And most of the banks are using this way of doing it. Basically, tariff prices are higher in a branch than on the digital channel. So suddenly, you have your digital usage which is increasing. But if it's at the cost of satisfaction, then it makes no sense. That's why we always link satisfaction to usage. And then you have, finally, your key performance indicators that are going to feed the tree. When you do such thing, you are able to have KPIs for the board meeting on usage and KPIs for the real operational people that are going to use them nearly on a daily basis. And then the operational people see how what they're doing is impacting the view and the global vision of the company. Relative to competition means relative scoring. So the first decision you have to make is to whom should I compare myself? Comparing yourself to your own peers is the best way to just don't move. So first decision is how to compare yourself with. You can choose to compare yourself against other type of competitors on the same markets, online banks, neobanks. You can choose to compare yourself in your own country or across countries, or you can choose to compare yourself to other industries. Obviously, we believe you should do all of them, but for each indicator, you may change it. For instance, when we compare country to other countries, we've discovered that the French mobile usage is lower than the Belgium or the Spanish one. One reason, and I'm not saying it's the only one, but one reason we've noticed and we've discovered is the fact that Spanish bank and Belgian bank were able to collectively create new services, the shared services. So one example is the fact that they have created a QR code for each bank account details. And this QR code database is centralized, meaning that any client from one bank can, in few clicks, transfer money to a client to another bank. And the only way you can do that is by working together. In France, they didn't do it. So a company, a new fintech appeared, named Lydia, and is working on this kind of services. After a couple of years, they have now 1 million active users, and all the transactions happening with this Lydia app are not transactions happening in the banking account. So somehow they're stealing some of the transactions that the banks should have on their own mobile app. So by comparing yourself with other countries, you can discover a new way of working. Once you have defined the area, you have to score each one of your performance indicators. So the way we have chosen is to say we're going to give 0 to the lowest score we've discovered, because we don't want to say, 10 visits per month is good or bad. We don't know that, and you don't know either, I guess. So the best way to do it is just to say the worst raw data I have, I will give a score of 0, and the best one will be 100. And then you score yourself against this scale. Tailored to subjective goals. One of the way we have decided to fight against this kind of notion is to only use outside-in data. So when we produce scoring and ratings, we don't ask any information to the bank themselves, because we know they can count it differently, we know they could lie. So we have decided to fully base on our data on outside information. Most of the banks right now you are using your own data to qualify what should be the online transaction you should reach. Here, with outside-in data, you can finally compare it to the other ones. You need to choose only quantitative information, quantitative data. You need to have a unique way of gathering information for all the banks. So each time we want to measure something, we always ask ourselves, how are we going to measure it? And how can we define the methodology so precisely that it will be the same way to score a Spanish, a Belgian, or an Ukrainian bank. And finally, you need all the data to be available for all the markets you have defined. I'm going to share with you 3 examples of what we have done. So right now, only 3. We have 700 indicators that are feeding a tree to achieve 1 rating, and just 3 indicators. The first one is about satisfaction. It's for the usage. Here, one of the indicators is to look at what's happening in the stores, the ratings in the store, and that's real data from the Spanish market. So we've looked at all the ratings with comments from February 2018 to January 2019, and we sum up for each brand to achieve such a graph. So to do that, we had to look at 220 mobile apps and then make the average for each brand. So I'm sure you all look at what's happening on the stores for your own brand, and you look at some of the other brands. But when you have nearly all the brands of a market in such a graph, then it's a powerful message, for instance, to the bottom 5 companies. And that's outside-in information. We have defined a market. Here we can see that we are comparing traditional with online banks, with even payment service providers. And it's a unique way of gathering the information. Another example for France, we have looked at the digital proposition in France in 2017 and 2018, and we've witnesses the fact that it's really a race and that everybody is investing a lot of money in that. When we did it for the first year, only 36% of the banks were proposing a fully digital subscription to the current account. 1 year later, a third of the markets implemented the fully digital subscription. Even more surprising for the consumption loans, only 16%, and it's really low, of the banks were proposing an online to start to initiate the online process online. And 1 year later, it was already 50%. So again, if you can really, it's outside information, you can compare it to your peer and see that it's a race. When we look at the transformation dynamics, we do several tests. We look at the technology that the banks are using. We look also at the talent attractivity. We strongly believe that one of the key pillar of the digital transformation is your ability to attract the best talents on digital. So we test HR channels, for instance. And there is another area we do for transformation dynamics is that we visit the branches. So always with in mind the fact that we are here to rate only the digital performance, we go and visit branches. And one script, for instance, is that we go in a branch as a prospect. We say that we are interested by a mortgage loan because we want to acquire a new house, and that we want an appointment with an advisor. So we enter the branch, we get the appointment, and we leave. And there the question is, how many banks are asking the email of the prospect? In Belgium, 0. So you enter a company, you're a prospect for quite a big product, and you're able to get out without giving your email. You have an appointment, meaning that you know you're going to meet someone, but they never ask the email. One key things we've discovered is how banks are digitalizing, prioritizing the digitalization of the customers, but sometimes we see that for prospect it's not yet. So that's 3 examples of indicators. But when you have 700, you can start to map a market. So here what you have is horizontally the digital stakes, so half proposition, half usage, against the transformation dynamics for all banks in France. So companies that are in the bottom right, somehow their challenge is a transformation one. So the main question they should have are, what's the culture, why can't we do it, and how we can make it happen. All the banks that are on the right of this graph have a delivery challenge. The question is, how do we make sure our customers are using what we have proposed, and how can we increase the level of digital proposition? And for companies on the up left, then they could, for instance, prioritize the action on trying to acquire customers from the other banks. So by using these kind of techniques, meaning that you add to your own indicators some outside-in indicators that you can gather for all the banks, you can clearly improve the way you communicate your own digital performance internally, to make sure people understand that it's not relative, that it makes sense for you, that you are looking at the rest of the market, and externally, explaining it to the financial analyst, how you're doing it, comparing it to your competitors. For instance, out of our ratings for France, we already have 3 companies that are using our data in their own reports to financial analysts. You obviously develop a detailed vision of your current position. You can track performance and your speed of transformation, and you can prioritize your digital initiative. But what is also extremely important is that you're going to demonstrate internally and externally that you have a data-driven approach. And I think that's the first brick of a digital transformation. Show to everybody that you base your decision on data and nothing else. About derating, quite quickly, we created the company in 2017. We already had the 3rd version of a methodology. Our goal is to change the methodology each year to add new indicators. Sometimes we delayed some. As soon as we discover that everybody is doing something, then we consider it's useless for the discrimination. We have produced a rating for France, Belgium, and we are going to do Spain this year. When we do the ratings, the first, I would say that banks are obviously interested, but as I was saying, investors are too. So we have started the discussion with financial analysts last year, and now this year, for the first time, we are invited by financial analysts to speak to the investors, to speak to the clients. So this global vision we are able to give on the digital performance of a bank make a lot of sense for the financial analyst. Just quickly, that's the type of graph we are giving to analysts, and it's public graph, so we have the same thing for France, and we should have the same for Spain quickly. Here the point is to rate a company, the Belgian banks. Again, this grid that has been built to be able to integrate any kind of companies from any kind of country or industry. So don't be surprised to don't find any AAA digital champion, just because in the world there will be a few of them, and we already know all the names. And digital deniers will be, for instance, mining company where there is nearly no information systems. So in terms of a relationship with the banks, after 9 months we had the first retail bank subscribers. Less than a year later, 50% of the French retail banks were customers. Now we have 80% of the French banks that use our data. And we have 14 major brands in Europe. Sometimes we do on-demand evaluation. We have a market where we want to produce rating for financial needs and for all the banks, but some banks just ask us to focus on specific markets, so we looked at Morocco and Ukraine last year also. Thank you very much. I hope it's going to help you.
Very, very interesting. So we do have a few questions. Do you rate the banking ecosystems as well?
We mainly focus on retail banks for the time being, also insurance, because we believe it will create more value for us to add banks from other countries and to be able to compare banks from different countries rather than expand it to other industry. So for the time being, we want to quite quickly become global on retail banks, and then we'll expand to other industries.
Okay. So you did cover the regional markets you cover. You did mention Ukraine. Do you have any plans to go into any CE, CIS region, or is it just?
It will be only on demand. So this year we're going to add Spain and maybe another European country, and later on we'll see. But we focus on Europe because in our mind we always think about the financial analyst, and most of them are focusing on one geographical area. So we first want to be able to produce rating for all the banks they are following.
Okay. Any questions from the audience? No? Okay. Thank you so much.
Thank you.